Hey, jeez, holiday cheer. How you doing, friends? It is Monday, December 30th, and this is the 0DTE morning market analysis. And today we're going to put a focus on a little bit of a long-term, not necessarily projection, but analysis of where the market is and where our critical levels as we head into the new year. Now, often when you enter a new year and those first few days, it's most people will look at those very closely, thinking that, well, the way the first week of January goes, so the rest of the year goes. I'm not necessarily into those aphorisms or, those little quips. I don't. I take every day as it is and look at it big picture, where the volume profile is. So on Friday, I had said that if we break a key level, it looked like at about 6,100 on the E-mini S&P futures, that we would enter a volume well and have a good chance of moving down. And that's exactly what happened. And so I keep on looking over to the chart so I can make that connection. That's exactly what happened. And now we're in a situation where we have a fairly well-defined profile, and a number of things could happen, obviously. I'm going to look at those different scenarios right now, and then we will look at how we're going to orientate ourselves for today's trading. The market has gone down a little bit in the pre-market. So combined with yesterday's move down and this morning's move down, we have broken above 17 on the VIX. So that means from our point of view, we're in what I call the Goldilocks Zone, that higher level of volatility that's just right. And that means that we're going to be going for wider flies, exposing ourselves a little bit more to that volatility. We may also have an opportunity to do a big-ass fly this morning. I haven't actually checked it yet, so that'll be interesting to see whether or not we can put on a 50-wide fly at the money pre-market. Although I don't believe that there are any substantial market reports this morning. Let me just check. And let's see. And the answer to that is, wow, it's very surprising. This morning, we do have a bunch of reports, but they're all later in the day. Isn't that so? So we're not going to have pre-market volatility moving up into those reports, although there tends to be a kind of systematic memory that volatility in the morning tends to rise, and then at 8:30 it tends to drop, and then when the market opens, it rises again. So we may still have an opportunity there. Let's get to the volume profile and take a look at where we're at. All right. So this is the E-mini S&P futures. We're looking at a daily chart. And the reason why I look at a day chart, at least at this level, is I want to get all of the profile that I can. If I am just evaluating, doing some trades within the trading range that I'm interested in, then I'll only view the amount of price action that will ensure that I get all of the historical volume in there. So as you can see here, we're going back, well, almost to the beginning of the year, to about February of this year. And I wanted to just point out up here is the 6,100 level, which is at the top of this node here. Now, the fundamental principles that we work upon are auction market theory, the works of fractal analysis from Benoit Mandelbrot, as well as some of the seminal market profile theories that were produced by Dalton and Stottlemyre. And then I've been a study of this for perhaps 20 years and have provided, I think, some contributions to that work that are significant. Of course, we're looking at high-value nodes and low-value nodes, but more importantly, we're also looking at those deep crevices within those low value nodes. Those are something that I think most of my predecessors never really took a look at. From an auction market theory, we can see that markets are looking for value, and they're trying to avoid areas where they don't perceive value and going from node to node. When you get into a low value node, what I call a volume well, there's much less liquidity and prices tend to move very quickly. And that's why I was warning that once we get below the 6100 level and broke out of this, that we would very likely drop to this next node, which we did. And in fact, we tested through the second node here at that looks like from about 59.25 down to 58.60. And then that was rejected and we came back up in a surprise move, actually. But we came all the way back up to 6,100 again. And so now 6,100 is being established as a very, very strong area of resistance. The big question is, are we going to continue down, and have we essentially squashed that Santa Claus rally, which is, well, I think the answer to that is a resounding yes so far. We've at least taken away these two advances here, and now we're looking to take out the original starting point, which would have been on Friday, December 20th. What will happen here, see, right now we're at support, which is at 59.90 at the top of this node, and if we can make our way down here, and then again, we've already shown that we can go through here, but if we don't consolidate here and start moving up, I think there's a very good chance that we move down to this node here and find some support around 58.60. So the thing that's troubling me now, just from a trend point of view, we've established a low here and a lower high. So now the big question is, do we establish another lower low? Now, if we find support and up here, that'll be a strong indication, but then we still need to get above this volume well, this low volume node here, and that's going to be a tall order. So for today's trading, it looks like we're breaking into this volume node. I don't expect a huge amount of volatility, although it's on the rise. So it's very unusual at this time of the year when we have such low volatility, but we have this kind of range built in. It's not a typical thing. So that's why I'm a little bit on the fence on what could happen. It seems like anything could happen. Well, particularly this coming year, because just within 3 weeks, we have the inauguration. The incoming administration, or the House, has not yet chosen a House leader yet, or Speaker of the House. That has great implication for a lot of people on both sides. They can't certify the election until they actually have a Speaker of the House. And of course, I think the Dems, they smell blood there. I'm not trying to make this a political discussion, other than that these are big goings-ons that could have direct impact on the market and what is going to happen. I think everyone is kind of resolved that everything's going to work its way out. The Fed has sent us mixed messages. They think that the economy is just peachy, although all the economic indicators show otherwise. And I think, in a way, they're trying to say, hey, job well done. We brought this market right up here. But what they really did was they essentially financed the market to these new highs. So let's see what happens here. We're at a great inflection point. I think it's going to be exciting. That's good for us as options traders, because that means that there will be a lot more volatility injected. And from a options trader's point of view, someone who's trying to collect that premium, that's what we love to see. Please get back up into that Goldilocks zone. Why do I keep on talking about the Goldilocks zone? Well, now let's get back to what we what we're here to do, and that's figure out what we're going to do today, and that is analyze the conditions for this morning. And when I say get into the Goldilocks zone, what I'm really talking about is looking at the VIX and the current levels that will establish the range of widths that we're looking at. While I'm doing this, I should open up my. I should have opened up my Thinkorswim much earlier, but because it takes about 2 minutes for it to actually open up. I don't know why. I'm on this kick-ass machine. I have a Ultra 2, which is one of the fastest computers on the planet, but it still takes a while for Thinkorswim. See, I can't type. Oh. I must type this up here. You don't want to see my password, do you? Oh, it wants a security code. Sorry for the delay. But this is critical. This is important. And I'm just setting up the E-mini S&P futures so that we can take a look at the big ass fly this morning as well to give us our full complement of expected move and volatility assessment. And the big ass fly is essentially what I call a poor man's straddle. It's like putting on a straddle, but with defined risk. And the reason why I do it is because it gives me a more definitive idea of what the implied volatility, how the market is pricing in options for that morning. And let's see, 75, we go down to 25. And we go up to 60, 125. Oh, isn't that nice? All right, you're probably all wondering, oh, what does Ernie see? What does Coach Ernie see? Coach Ernie sees goodness this morning for traders. A lot of opportunity. So indeed, the scare of moving down like we did on Friday and being at critical levels where we could move down substantially more has heightened volatility. So what we're going to do right now is we're going to take a look at the VIX, and then we'll look at the big ass fly, and then we'll make our assessment. All right, so here's the VIX. So we have our out of the money fly guide, which will tell us what widths that we're going after. You can see that we are now squarely we've entered into the Goldilocks zone. So these are what I call volatility regimes: Zombieland, Goldilocks zone, Chaos zone. And the sweet spot that we like to be in is the Goldilocks zone, which is between 17 and 32 on the VIX, on the S&P. And you can see that we've moved up into it. We're currently at 17.8. So that's nice. That means that we can start looking at wider flies between 20 and 30 wide. All right. And so if we're between 20 and 30 wide, we go up to the big ass fly debit guide that will tell us which side of that we should favor. So here we're in Goldilocks 1, so we're between 20 and 30. But now we need to look at the big ass fly and see where the debit is on that. Are we going to be on the narrow side or the wide side? All right. Tensions coming. Let's see. I need to go down to Thinkorswim. There we go. There's the big ass fly. Our debit is below 20, 19 and change. All right. So that's very promising. Let's see, we've got to make sure we have all the dates correct. We do. That means the big ass fly is on as a trade also pre-market. We'll be looking to put that on this morning anywhere from 7:30 to 8:30 are the optimal times. Well, it's already 7:47. So 20 on that. So we need to go back to Trading View and look at our guide. And we can see that a 20 is on this side of the width guide, right? So we're 20, 25, 30, so we're solidly into the 25 wide category, maybe even 30 wide, right? So we're opening ourselves up to that opportunity. The opportunity is spelled volatility. All right. It's hard to do an assessment here of where we are in terms of a trend. Normally, I would say that we're moving up because we've now started to turn up. We're above the moving average. Plus, you can see that the Hull moving average has changed its slope by that change in color. But if we were to really take a look at the ES, it doesn't look so upwardly mobile. Not at all. So let's see if we can get a day chart in here. And yeah, we're moving down for sure. This is that last candle. And so if we look at it from the point of view of the SPX, I would say that we're below that moving average now too. And with 3 days below, that's kind of up in the air. That might even bring us into potentially putting on a Batman where we go above and below the market. But I would say right now we're at that kind of inflection point. Are we going up or going down? We don't really know. We've got to pick one. I'm going to say go down today. So we're looking at 30 wide put fly below the market, as well as a big ass fly for a pre-market. If the big ass fly works out and we can hang inside of its profit tent after the market opens, then we'll stick with that and see if we get a move into a structural level. So speaking of that, that's our next area of analysis. And let's take a look at where those structural levels are. So we're revisiting volume profile. What we want to do is mark off the low sides, the low volume nodes. And the tops of the high volume nodes. So we're currently sitting right here at about 59.90. If we break through here at, it looks like 59.30, there's a good chance that we could break down as low as, wow, you may not want to hear this, but I think that we can easily break down to here, which is at approximately 58.60. All right, those are our key levels for today. And on the upside, if we can manage to rally and break above this 59.90, and then we're going to find resistance here at 60.35, and then again at 60.80. Okay, so there's your key levels right there of support and resistance. Of course, the behavior that we would likely see is an affinity to stay inside the node and a non-affinity once we're inside one of these low-value nodes where we want to move through it very quickly. All right. Let's go back to the big head. So we got our marching orders for us. We got a big ass fly this morning. Right now, I currently have it sitting at centered on 59.75. That's a 50 wide, either in E-mini S&P futures, or if you can trade the SPX in the morning. I don't know what that would translate to it. I'd have to do the calculation, but your platform should be able to tell you where the market is. Basically, 50 wide at the market in the morning, and you should be able to pay less than $20 for it. And if we move into the market and there's an opportunity for out of the money fly, it looks like a 25 to 30 wide put fly with a 1 to 9, 1 to 10, maybe even a 1 to 12 risk to reward ratio. Anywhere within that range would be great. So there we go. Let's see how today works out. Looks like it's going to be a good day. Tomorrow's going to be the last day of the year. We'll have another special show. Thank you very much. See you out there, man. Oh, by the way, don't forget, in the beginning of this year, we're launching our school community, which is called the Zero DTE Academy. I have sort of pre-launched it prior to. I think we have about 65, 70 members right now. But once we start doing the marketing, there's going to be a lot of people coming in there. It's going to be a very vibrant community. There's all kinds of resources in there to learn how to become a professional trader, learning zero DTE strategies, learning volume profile. There's going to be live events. You're going to really love it. So check it out. It's only $35 a month. The link will be down below. So that's it for now. Thank you very much. Have a great day.